I have crushed the S&P 500 simply because I am poor. Well, not exactly. But in this video, I will be covering how I managed to outperform the S&P by a very wide margin, and you will know that it is my true performance because around every quarter I give updates about my portfolio, and if you have been following me, you will know that I have a very concentrated portfolio as well with very few positions. Now, the first update is the beginning of the 2024, which I will be focusing mostly on, even though I have made changes to it during the year. So at the end of 2023, I have had 7 positions, but it was and still is incredibly top heavy. I have sold Doge, Tencent, Alibaba, and Brookfield during the year, which have all turned out to be quite good decisions. RaySash here is a combination of logistics and REIT, but at that time it was around 85% logistics and 15% REIT, and I have trimmed my FS and TAV positions very slightly. So this first portfolio, if I have made no changes to that, would have returned 104%, so your $100 would have become $204. The returns are in dollar basis, obviously. In Turkish lira base, they are even higher, but here we care about getting the returns in dollars. Now you may say that RaySash has done better than the REIT, and you will be right, but I first sold my RaySash to get more of the REIT when RaySash had around 40% premium to the REIT, and then I have sold some more RaySash, and when I say RaySash I mean the logistics, to get the REIT when it had a premium of 50% on the REIT. Currently the premium is down to 26%, so those transactions both have paid off very well, and it has actually increased my performance. Other than that, the companies that I have sold or trimmed almost all went to the REIT, so that has also helped my performance. Now let's look at the second update, which I have shared in April. As you can see, I have sold out of Doge and trimmed TAV Airports and Anadolu Efes. Now, I don't want to lie, I got incredibly lucky with Doge and sold it out at over 390 liras per share. It was going up like a rocket, and I decided the future returns in the RaySash stocks would have done so much better. Thankfully, I tweeted about it very soon after I sold. So I got proof of that. This means that even though Doge is a red in the chart at minus 31%, I actually got out of there with a profit. Also, another thing you can see there is I stated that all of the capital from those sales went into RaySash stocks. And if you look at the graph here, at that point the REIT was still trading at incredibly low valuations. So the capital that I redirected has almost doubled in the remaining 9 months of the year. The FS trimming did great because after Russia news, FS lost all of the gains it had made during the year. TAV also did pretty good, almost a 50% return since April, but not a double, so all great choices here, and with the hindsight I could have sold out completely out of those positions too. But I am not going to complain. We can't get them all, and a bit of a diversification is always good for the mental health, at least for me. Then we get to August, where my prior streak of great choices took a hit. I have sold out of Alibaba, Tencent and Brookfield to get into coal. I bought AlphaMet and Arch, but then I have sold out of Arch due to the merger, and bought more Alpha, which since then it is actually a net loss for me. My average cost is around $286, and currently it is at $192. Ouch. Well, you can't win them all. And just like I'm showing the winners, here is a very big loss as well. Thankfully, I managed to keep a low allocation there with around 10% in coal in August, and since then I have not added to the coal, and with the losses currently, the alpha position is at 4.3%. And I don't plan to do anything with it, at least for now. I will wait and see where it goes in terms of the investment case, not the stock price. The allocation of RaySash is down here compared to the prior update, but it's because of the stock price. I have not sold or trimmed. Then we get to the last update of the year. I shared this one in November. This was before I made the switch to get majority of my holding into the REIT. I have added back CCI to the portfolio, and here it is at 3%. Since I owned FS, which owns half of CCI, I did not want to own any direct CCI. But then it got so cheap that I wanted to get some direct exposure as well. It is another long-term holding that I hope to never sell. Also, here you can see that almost 3/4 of my portfolio is in RaySash stocks. Talk about commitment. And finally, let's look at the January 2025 update. As you can see, almost 80% of my portfolio here is in RaySash stocks. I have kept buying and they kept going up. So here we are. So going back, the original portfolio which I have shared at the end of 2023 and beginning of 2024 would have returned 104%. I outperformed even that due to taking action that has resulted in me getting a better results, but I won't be getting into that here. I mean, I've already covered the moves, so you can make a very educated guess, I think. For those who don't know, I release deep coverages about the Turkish companies that I have and monthly updates regarding my investments on my Patreon. You can join to get access. I work really hard to provide good value, and if you want to support the channel and like the work that I do, you can join me there. Before closing, I want to talk about how I could manage to get a return that more than quadrupled the S&P 500, which has returned almost 24% excluding the dividends. And I use this number because I did not include any dividends in my returns as well. And even with the dividends, it is at 25.6%, which means that my returns still more than quadrupled the S&P. The first thing that has helped me outperform by this much is obvious. It is the high conviction on my winners. If I wasn't so heavily concentrated on research, there is no way for me to get returns this high. When you find an investment that just screams at you, I believe it makes sense to bet heavily on that investment, just like Buffett and Munger suggests. The second thing is the fact that my capital is very limited. It means that I can basically get in and out of positions without creating huge swings in the companies that I get in and out. So, for example, when you look at Warren Buffett, he has the burden of investing billions of dollars. Research's market cap just got over the $1 billion mark. Even if Buffett wanted to, he couldn't invest in this opportunity. So the next time you see investors that have to invest tens of billions of dollars, know that they are choosing their investment on a much smaller pools than you can. So Buffett having half of his stock portfolio in Apple doesn't mean that Apple is going to be the best stock for you as well. It means that Buffett thinks Apple is the best one he wants to go within his very small world of possibilities. So you have the advantage to invest in companies that Buffett can't. The size of his capital literally ties his hands. So how I got my returns this good is I realized I don't have to tie my hands with the Magnificent Seven or other major global companies. I can find a couple small cap stocks that I can bet heavily and ride them. And so far, it has paid tremendously. That's it for today. If you like the content, please do YouTube things such as smashing the like button and subscribing and sort of things like that. You can check out my Patreon, but don't feel like you have to. Everything I share there is public information with my commentary. You can just go to CAP and get access to the files and updates for each Turkish company. I just do the hard work myself with additional commentary. See you next time.